Anyways, so welcome to the live stream. It's a bit unconventional. I know. I I know the typical broadcasting day, or typical live stream day, is on Thursdays. Thursday evenings at 7. Those of you watching, it's not typically about 2:11 p.m. Eastern time on Fridays. But I wanted to kind of catch up. I know I've been away. I've been traveling. A lot of very busy right now, but I just wanted to come on and discuss, clear the air with some things that are actually topical. I didn't want to wait a week when they're not topical because there'll be more things to discuss. But there's a few things I figured we could go into. Um, Primarily, uh, first of all, you've probably seen the title. It's part two to the state of the Canadian economy. That's going to be a bit of a shorter segment. I want to focus on gold and silver bull run, what that means for investors. That would be the bulk of this live stream today. But I wanted to highlight and just kind of a follow up. The last time I remember we had discussed, and I'll pull it up. Uh, Hold on a second. Showing up, yeah. Here we go. I remember last time um, we discussed mega projects by the Carney government, and I thought it'd be interesting to kind of follow up. Parliamentary budget officer had given, well, we have had given kind of an outlook. He in an interview on CTV, for those of you that caught it. I think it was CTV I saw it on. Um, but he also he'd also given a bit of a statement, an announcement on the state of the budget, what's to happen, like what we're likely to see, and he was giving kind of his analysis of what's likely to be expected in the coming budget when they eventually release the budget. I wanted to highlight a few things because these kind of go back into what we were discussing last time. I talked a lot about the five major mega projects that the Carney government is pushing, but there's a bit of a backdrop to that, and why I was so pessimistic on that. And I want to kind of explain myself. And this actually, it's funny enough. I came across this and I said to myself, this kind of proves my point. Um, and I mean, like, first of all, the raising interest rates. So sorry. So they're projected to raise interest rates again. The very fact that they're projected to raise, they dropped it, but they're saying, oh, but we're going to raise them again. Probably they're expecting to raise it again, and maybe the reason they're expecting to raise it again is, again, the budget is not. I mean, when you start with, at least the guy was speaking. What was his name? Um, the guy's name. Forgot the name of the budget officer, but um, sorry. Someone drops the link in the comment, but basically he said that it's almost alarming. It's paraphrasing him, but it's almost alarming. The gist of what he was saying, almost alarming that of how bad the budget is. Like, I remember when the last election, I heard on the radio during the last Canadian election, and I mean, I don't want to get into the politics, but I think this quote just sums it up. What we're seeing now perfectly, which was, I was on CFRA radio, and the guy said, if because this is back when everyone thought the Conservatives were going to win the election, and I remember the guy on the air, I think it was Bill Carroll, said this. He's like, on CFRA, he made the comment that, what was it again? And I'm paraphrasing, but nobody knows how bad the books were under the Trudeau administration. Nobody knew how bad the books were. The Conservatives were coming out with all these their whole platform, their ideas to revamp the Canadian economy, fix all the inflationary problems, and bring the Canadian economy to a point where they can lower interest rates confidently, knowing that they're not going to have to raise them in the near term within a year or two. And he said, or significantly within a year or two, and he said, and that's just the point. No one knows. Like you can come with all these policies and then open up the books, and suddenly it could be so bad that you can't really do all you have to end up cutting. And one that goes to one of the things that this is the big, I guess, I think at least I foresee a lot of the gripe that people are going to have with these projects, and a lot of the negative sentiment that I've even heard talking to people in the industry, in the private sector. Um, they're concerned that the Carney government's making decisions on spending without really paying attention to the economic implications it has on inflation. Because companies are not going to just companies. The way the private sector typically reacts is, inflation rises, cost of running the office, the cost of day-to-day expenses for the office become more expensive. So what do? They they cut the staff. They get rid of staff, they fire, and then they hire. And then when the economy is done contracting, then they'll hire again. And this is the reality. And I think a lot of public servants, and at least the sentiment I've heard, is that a lot of people in the private sector feel that the government does not paying attention to the unemployment aspect, which is a major issue. Um, the job market's more competitive now than ever. 7.1%, and that's not including underemployed and people who just gave up seeking job. There's when we look at it, we look at unemployment. We have the broad unemployment, which is everyone, including people that are underemployed, meaning you could be hired for something that that you're skilled, that you're way overqualified for. Or there's like, I don't know, like people that just gave up. They're unemployed, but such a tough market, they're going to hold off for a couple of months, take a break, and re-educate. And then there's people just simply not looking for work, whether they're in school. But then you have and that's what I say the U.S. because the U.S. I saw this article, 8.1% unemployment in the U.S. Then when you drill in, there's really only 4.3% unemployment, comparable to the 7.1% unemployment in Canada of just the real unemployment rate. And that's very alarming. The fact that this inflation, a lot of if the costs go up, if the costs of operating go up because of all the inflation, then is it really beneficial? Is it really going to create jobs as quickly as they say it will? And the answer is never really. It's never really going to go as planned. Like the government can plan till they can plan however long they want. They're not going to get nothing ever going to go by plan. That's a very pessimistic way of thinking, but I think it's a realistic way of thinking. And the other thing, and then like there's, of course, like if you look at what was it? It was here, the federal debt to GDP. The fact that the federal debt to GDP is they're forecasting that it's going to go up. And it's only going from 20, we're at 41.7, according to this, 24, 24, 25, it was looking at 41.7%. And now they're saying, they're saying it's going to increase. That's their forecast. Forecasts are never, going all the way to 2031. No one knows what it'll be there. Who knows? We might even have another government if there's an election or they're not reelected. And so 42.5 and percent, and it's going to go up to 43.3%. To put it in perspective, that's kind of scary when you think about the fact that we don't want to be in a situation like the U.S., for example, where they had exponentiating debt to the point where they can't even pay the interest, or they're struggling to pay the interest payments on their debt. And that's a very scary thing, and that's scary. That should be scary for a taxpayer point of view. When you there's only three. Like I heard this line the other day. I forgot where I heard it, but someone had made a comment. There's only three ways that the government can really quickly generate money. It's either they cut social programs, which Canada is famous for. We have a lot of social programs. So we either cut social programs, or what was the third one was? But I remember it was cut social programs or increase taxes, which were the two of them. And there's a fundamental issue there too. As you raise taxes, you're just wealthy. Like this, you've seen this in other countries in other countries, wealthy people just leave. If you raise the taxes too high, no one wants to stay here. So it's an uphill battle. It's kind of a tightrope walk. But I just wanted to kind of clear the air on that. I thought it would be interesting to just kind of give an update on that. You can find this. It's the Economic Fiscal Outlook, September 2025. I'm not going to go through the whole thing. Some interesting stuff. If you're interested, check this out. Um, and yeah, and so to I want to go back to how we're discussing about gold and silver. And we haven't discussed this really in a while. I think if you follow the podcast, I discussed it a bit, but we've seen record high prices with gold. We've seen record we've seen silver kind of catch up. I've seen forecasts that say like $300 silver. This is I mean, that's pretty significant. I remember last time I bought silver was at like $45 Canadian, and I paid like $45 Canadian an ounce, and now and so or 44 Canadian dollars an ounce. Uh, No, I mean, regardless, it was around that ballpark, but correctly. But the fact that now they're saying, and I mean, there's a lot of nuance going on right now. I mean, you see people online kind of saying, oh, there's differing opinions of why it's going up. Some opinions I've seen why gold's going up. It's the more plausible reason, I think. But if you look at acquisition of gold by central banks, a lot of Eastern central banks are purchasing gold rapidly. If you look at the volume of gold, it's mostly coming from what I was reading, it's mostly coming from larger asset management firms, larger central banks, larger institutions with larger portfolios. Retail is not really putting a dent compared to that. And so it's a lot of this is institutional momentum it's good, and it's momentum for reasons. And we've seen historically, even if you look at the price of gold, and you've seen it spike high. I'm not saying it'll go down again, but gold goes is very cyclical, and it's one of those assets that I think it's like a timeless asset. People tend to look to it during economic uncertainty. I think that's part of the reason what started all this momentum bull run with gold, and particularly silver. And I'll get to silver in a second, but I think the reason gold has become more of a perceived positively. I mean, historically, some people. I mean, there's always been people that say, "Oh, you're the gold buff," or "You're very anti-gold," and you're being very polarized. People, but then now it's kind of weird. Everyone's going for gold. It's for gold, and I think there's a bit of an element behind there that it's we're living in such uncertain times. I mean, you have the ongoing war with Ukraine, you have the on with Russia and Ukraine, you have the ongoing war in the Middle East, and and in the past several months, in the past year, it's been almost like a flare up, and that's been causing for over like a year and a half, 2 years now, it's been been massive flare up in the Middle East, and you're seeing a lot of like high unemployment, high inflation in Western democracies, and what this is happening now, and this is pushing investors into trying to hedge by buying into assets which can store value. And while gold, it's interesting, while gold and silver are historically seen as stores of value, there's a lot of things that are happening now in the environment, and that's where I'll segue into silver. That, um, and I say, well, actually, I'll finish my sentence. There's a lot of things that are happening in the environment that are making these assets behave abnormally than they should by textbook just historically how they behaved. If you look at silver, though, segueing to that, silver has massive industrial demand, and especially the tech sector, semiconductors, and like solar panels, all that stuff. And I think silver and also critical minerals. I wrote an article about this. Check out in LinkedIn. But silver is interesting because for years we've seen it kind of stay low. And I mean, I won't go into this. It's a bit of a controversial topic. People say, "Oh, it's because the central bank, maybe big banks are shorting silver." It's a whole other ball game, whole other discussion. We can unwrap it another time. But yeah, I know. I was thinking about, but historically speaking, when you think of, sorry, I lost my train of thought. Uh, but historically speaking, when you think of, when I'm trying to remember what I was going to say. Anyways, historically speaking, when you think of silver, um, I'll move on to my next point. Sorry, I lost my train of thought. But um, sorry, I heard a sound and then I just lost my train of thought. But um, silver plate, like, oh yeah. So I won't go into the rabbit hole of the central banks or the big banks shorting gold. It's a bit like a no, I mean something. It's in a whole other ball game, but um, there's a massive industrial demand, and I think silver, along with other critical minerals, are beginning to see that push because we're seeing a massive wave of the AI the AI tech, the whole thing about the AI tech bubble. And I think what's happening too is you're seeing demand for these critical minerals that are important for this transformation. If we are to transition and build the infrastructure behind AI, you need these critical minerals, and that includes silver. And so this is I think it's mainly going to push silver in the coming years, in the coming decade. I think we are going to see silver surprise a lot of people. And I think people that have been holding silver for years, I'm sure will probably be very happy they didn't sell their silver by the end of this. Um, but we're at a point right now where there's just demand is not meeting supply, and it's because for years we underestimated the value of the mine. The mining sector has always been I think, in my opinion, I think the mining sector has always been undervalued. People look at the mining sector and like, oh, it's dirty, it's unclean, it's not environmentally friendly. But at the end of the day, it's critical. If you want to build the systems that are environmentally friendly, you need these critical minerals and how you get them. There's other reasons why. I mean, we can go into the consumption of oil in the industry and all that stuff. But that's slowly changing with the bigger companies, at least. And yeah, and I think and I think for invest in terms of, I know, like, for example, and I'll kind of segue into this, I'll end with this, but the actually came to mind was the was the whole concept of like an AI bubble, and the idea that tech companies are way overvalued. And although like it's a controversial. I mean, for people in the tech industry, they might take that badly, but I would say it to be like negative towards the tech sector. I mean, the tech sector has carried the S&P, has carried the Nasdaq for over the past decade. But I think we're seeing what happened with the dot-com bubble, similar, where you had so many companies that were built. I'll tie it into why it matters for the critical minerals when I was talking about silver. But for years, but it's like the dot-com bubble. You saw all these startups. But at the end of the day, but what's interesting with the AI thing is if you have like a handful of companies that have built this, that have this infrastructure they built, they're developing LLMs, and they're developing they're developing more powerful data centers, and they're scaling. But when you have a lot of companies but then you have a lot of startups and other companies that are basing their systems off their own systems. So it's not original. They're not necessarily developing original LLMs. Like for example, Meta, or not Meta, OpenAI developed ChatGPT, but you won't believe how many people say, "Oh, I use ChatGPT to build this software that I'm selling now," and that's kind of dangerous in the sense that it's like a domino effect. And so it kind of brings in another nuance, and this is where I'm getting at with the silver. Is like these companies are driving demand for silver because they need the silver for their data centers and their tech, for the hardware aspect of it, but they need these critical minerals for hardware. It creates almost like a bottleneck in the sense that it's the demand is more concentrated around the larger, like the conglomerate of like handful of companies that actually have built these systems that are scaling and everyone's using. And so as an investor, when you look at that and you kind of say to yourself, wow, this the entire system. If one of these guys fall, and that's where you got it. Like a lot of people will look at these, and where I'm getting at it, a lot of investors will look at these smaller companies and say, okay, that company, you have like 150 companies, they're all doing, or 100 companies, they're all doing really, really well. I think because, and they're all building hardware, or sorry, or not hardware, or even the hardware, I guess that would benefit, but I mean, but I'm talking about scalability, or scale of the demand. But they're all basing their, but they're not necessarily building their own data centers. They're taking data centers, they're renting out data centers from these larger companies. They're almost seeing like a ghost demand, if you will, a ghost demand. So I mean, that's something to monitor as an investor when you're looking at these industries, and you're looking um, who where is demand for these critical minerals, and where is demand for silver going to go. And I think right now it's a bottleneck where we are seeing a heavy demand outpace supply, but when that catches up, It's the window of opportunity for investors. It's like, this is the ones. I always say, I tell people like critical minerals are a once in a lifetime opportunity, and if you get in, it's like any asset. You get in before strategic accumulation of the larger firms. You're set essentially. I mean, within reason. I will end this with saying this is not financial advice. Please contact your financial advisor. Everything on here is informational and entertainment, and opinion. So do your own research. But yeah, that's it for today's live stream. I don't think it went as long as typical. I wasn't keeping an eye on the clock or anything, but hope you enjoyed. Don't forget to like, subscribe, turn your notifications on, and leave a message or a comment below if you want to see a topic discussed in the future. Anyways, hope you enjoyed.